Hi everyone, welcome to the Buffett and Beyond Research Saturday ETF report. And the big question is, are we setting up for a tough September? And we're going to take some look at some charts and let you know. And remember, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. Don't forget that if you want a full free month subscription to any of these videos that we have, we put out 3 a week, 3 different videos on a Saturday. You get the 3 videos, and on Tuesday, Wednesday, Thursday, and Friday, you get a letter on the market and timing the portfolios. All we need is your name and email. We want you to get a free month subscription so you can see what we're all about. All you have to do is go to buffettandbeyond.com. Buffett is spelled with 2 F's and 2 T's. buffettandbeyond.com, and give us your name, your email, and you'll start getting a full month free subscription to our letters. And the first chart we want to look at is the QQQs, which is the NASDAQ 100. Now we have our short-term indicator up here, and it's still pointing down, even though we're positive while I'm recording this, which is early afternoon on Friday. And we expect this week to be a good week, or end the week in a good fashion, because it's the end of the month. It's the last day of the end of the month, and there's portfolio dressing going on. And then Tuesday, when the market reopens, because Monday's a holiday, we expect the IRA and other pension money to come into the market, and it will be invested into stocks. So we're looking at that, but September is the toughest month of the year, and everybody thinks October is, but September is the worst month, and then October is when it bottoms. So everybody is scared about October, and they should be. But anyway, here we are in a downtrend here. These are the QQQs, the NASDAQ 100 stocks, and you can see down here, this blue line is the 50-day moving average, green line is the 20-day moving average. 20-day average is below the 50-day. We don't like to see that, but this market has been playing around that area between the 50-day and the 20-day for 3 or 4 days now. So we're looking at this a little askew, if you want to use a really big word. Down here, the volume on the downside, which are these red vertical lines, they've been higher than the green lines, which represent the market volume when the market closes up. So the red has been higher than the green. Not a good sign. Also down here, we see this indicator wanting to turn down, and yesterday, and I'm talking about Thursday, the QQQs were up, or the NASDAQ was up almost 200 points, and the QQQs, of course, were up. And this black line started turning up a little bit, and then by the end of the day, the QQQs actually closed flat, actually down a little bit, but call it flat right in there. So if this crosses down to the downside of this red line, so if the black line crosses down over the red line, we'll see some selling. That'll be a sell signal. And when we look at the histogram, which are these bars down here, when we look at that whole histogram, we see they are coming down little by little. If they cross that 0 line, which is this flat line in here, then there'll be some technical people who sell at that particular point. And guess what? We're going to have to wait until Tuesday when the market reopens to see what happens. And we expect Tuesday to be an up day, but then Wednesday will be the second trading day of September. The pension buying will be over, and then we'll see what September brings us. Let's look at the inverse of the QQQs, which is the SQQQ. So it's actually the QQQs upside down, and we see it wants to turn up. Now, if this turns up, that means the market's going down, because this is the inverse of the QQQs, actually the triple. So we see that on a buy signal here. That means it's starting to go up, which means the market is starting to go down. So we'll see what that does, but it's stalled out right here just now, and this just doesn't make that crossover again. And there's that 0 line on the histogram. So this is the opposite of the QQQs. If this turns up, the QQQs are turning down. Now let's look at the Dow. The Dow reached a new high this week, right in here, and right now it is testing that high, the previous high in here, which is this black line, and we draw that line over, and that's where we're sitting right now. And it does kind of look like, well, let's go back up here. It looks like this double top in here, and then market went up the other day, and now it's coming down again. And boy, oh boy, this is close in here. This might be a little topping action, but it hasn't topped yet. And we'll see where it closes today. And again, I'm recording this midday on Friday. And the S&P 500, same thing. It almost reached its previous high. This is pointing down a little bit, but when this indicator is between this top line and this bottom line, it's kind of in no man's land. It's here when we got a signal to buy, here we got a signal to sell. So actually we're on a sell signal, and until this line turns all the way up in here, we're still on that sell signal. And you can see the red lines are higher down here, and we don't know where this black line is going to go. It looks like it wants to turn down, but we've been fooled by this indicator before, starting to turn down without actually turning down. Let's look at our housing indicator, and yeah, we reached almost a double top in here. Actually, we did reach the closing high of several weeks ago, or about a month ago almost. And down here we have all red bars, so we've been down about 4 or 5 days in a row. And again, if this turns down now, we've got a declining top in here while we had a failure at this high in here. Not a good sign. But this indicator is above the 50-day moving average, blue line, above the 20-day moving average, the green line. So that's good. That's a lot of technicians would look at that and say, hey, that's still bullish. Until it breaks down below this 20-day moving average, it's still bullish. Let's look at the transportation. Transportation is going up. That's a good thing, because that means that transportation is going up. That means raw materials are being delivered to manufacturers, and manufacturers are delivering to the retail outlets, or coming directly to our door, as a matter of fact. So this is a good sign that the transports are going up, again, above all their three averages. This red line in here, 200-day moving average, green line, just crossed over the blue line right in here. That's a good sign. So if the transports are good, and that's why the Dow is the better of all the averages right now, and we'll see if that stays. But we still do have a little bit of a sell signal up here. And so this is the one hope that we have. Transportations usually lead, because that means goods are being manufactured, goods are being bought on the wholesale level and being sold to the retail folks, and that means they think we're going to go out there, us customers are going to go out and buy more. And that's because interest rates are coming down, or the Fed pretty much said they're going to lower interest rates in a couple of weeks at the September meeting. So that's why the transports are doing pretty good in here. Now let's look at the technology. The technology definitely pointing down, but still it hasn't given us an intermediate term sell signal in here. And it's between its 50-day moving average and its 20-day moving average, just like the QQQs. And let's look at the semiconductors, and semiconductors are looking pretty good in here. So we have the transports looking pretty good. We have the semiconductors looking good, crossing over that 50-day moving average to the upside. And now the market's not closed yet, so we'll just have to see what it does. But we do have some glimmer of hope in there, and with the market coming into its worst month of the year, which is September, but we have the Federal Reserve saying they're going to reduce interest rates, and so that's a positive. And we don't know if we're going to see a bad September or not. So in other words, these charts, that the question of the day is, we'll see a bad September, and right now these charts are confusing us. Semiconductors up, the tech stocks are down, and so maybe that's the problem, is just the tech stocks going down. Now, this is what I wanted to show you last week, and this is the QQQs, the NASDAQ 100 stocks. NASDAQ dropped about 2%. Our portfolio dropped about 2%. But on Thursday, when we were having the rally, I took the intraday numbers of all the stocks. Now, remember, NVIDIA was coming out, and that's been the worst stock in our portfolio for a couple of days. I mean, believe me, NVIDIA is the best stock in our portfolio over time. But when I took this, it was down 3.9%. So what we were looking at, and we took hedges on the SQQs down here, those are the hedges. So I want to show you that even though we took on hedges of about 30% of the portfolios, 30% hedged, even though we were wrong during the day, during the middle of the day, our stocks were going up faster than the hedges were going down. And so, in other words, we were wrong in here. We thought the market was going to go down, but the market went up instead, and our hedges went down. The thing is that we have such good stocks in this portfolio that the stocks go up faster than the hedges went down when we were wrong. But what happened by the end of the day on Thursday? This actually went positive. So our stocks were positive and the hedges were positive. And when I say positive, I'm talking about 1 or 0.2% by the end of the day. So we wound up having a good day. I just wanted to show you what's the lesson when you look at your portfolio during the middle of the day. The lesson is, don't look at your portfolio during the middle of the day, and don't look at it much at all. You've got all good stocks. So here we are with the stocks, and this is Friday afternoon that I just took these numbers, and we're down 2% from last week. We're still up almost double the S&P 500. And then if you take the hedging in there, which we're making money from this year because we're timing those hedges, we're more than double the S&P 500 and more than double the QQQs themselves. So in other words, if you take the best stocks out of the QQQs, we're doubling the index itself, the QQQs. Not bad, folks. Very, very nice. So we've had a strange week this week because everybody was waiting for NVIDIA, and then NVIDIA beat earnings, beat revenues, but it didn't really wow the market, so it's down for the week. But it'll find a new level, and that'll be the time to add more to the NVIDIA positions that we have, and we will do that. And we're going into September, but we do have those transports looking good. And we have the semiconductors looking good. So are things as bad as everybody says? Watch out for September. We'll see next week, folks. And remember, Monday's a holiday and the market is closed, and we'll be back here with you Tuesday. So remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So folks, go out, be with your family, have Sunday dinner with them, be safe, and we'll see you back here on Tuesday.